Okay, so East Coast time.
East Coast. Where are you?
I'm on the West Coast, so it is almost 9 o'clock
Oh,
in the morning.
okay. I've been up pretty early today, so yeah, my wife's in Arizona now, so I've been communicating with her a little too. So
So you've been
Okay.
living in both time zones like I have.
I kind of have. Her mom hurt herself, so she's taking care of her. I'll be going out there in a couple of weeks to do nothing, just support. But I've been doing a lot of housework, not easy.
Are you doing like fix-up projects or just kind of like maintenance of the home?
No, I'm cooking. I'm cooking. I'm washing dishes. I'm doing laundry. I've been making the bed. All the stuff that I've kind of taken for granted to some extent. And just walking around the house. It's good. Shopping, all kinds of stuff. I'm alone, so it's interesting.
Well, that's really helpful, I'm sure. And is it at your mom's house you said you're helping?
No, I'm actually my mother-in-law fell, so my wife went over there to take care of her. So I'm just I'm home alone. I am an empty nester at this point. We are, but I'm really I'm just here. I'm in a pretty large house, and just I'm taking care of myself. I can't do that. I'm just attached.
I'm right there with you.
I'm sure that's a new adjustment to have a couple of those changes at once, and you got the house to yourself. And I mean, at least you're not throwing big parties, and you're taking care of the place.
No. Those days are over. I did, I mean, I'm an old guy. I grew up in the '60s, so forget about what I would have been doing, But yeah. Now it's interesting, That's all. So but I've been looking forward to this. This is good.
Yeah, we're totally excited, and thank you so much, Jerry, for being here. I'm sure Sharon and Michael will join us shortly. Do you need me to send the link again? Okay. There's Tank Poco.
Hello.
Hello.
Yeah.
Do you want to be a moral support? Oh, she left as soon as I acknowledged her.
I hope Michael can get on. I'm sorry.
I think people usually kind of start joining us around 9 o'clock or 12 o'clock your time, and then they kind of funnel in. And I know a lot of people are looking forward to the topics today.
That's
Alrighty, I just invited Sharon up.
That's our Teams, which I'll shut off.
Would you like for me to get the Prager Metis account up to the speaker panel? It'll be whenever there's your account is up on the speaker panel, it highlights for your followers that Prager Metis is a speaker at this space.
Whatever you want. I'm easy,
Why not? Let's get the moral support.
Yeah, I hope Michael can get on. He just tried to reach us. He's on with Sharon now, so he's
okay.
He's a really strong tax person in this field. I mean, I know enough to be. I know he knows more than I do, but I know plenty. So.
And while we're waiting, good morning. I see True in the room. Goldilocks, Septimus, Exodus. Good morning, everybody. Welcome. So Meta Maestro, we were talking about temperature this morning, and we were saying how hot it is where Sinful is, and how cold it's 38 degrees where I am. What's the temperature like where you are this morning?
Oh, it's really nice. It's probably 70 degrees or so, sunny.
Oh
It's just a
wow,
nice. It's a nice day. It's a nice day, and I'm in New York. It's just a really nice day. I'm in
that
the
sounds
yeah, I'm in Long Island, so I'm looking at trees and stuff. So it's nice.
nice.
Yeah.
That doesn't sound as cold.
No, wow. So you must be in Canada or something.
It's I could run to Canada in a few days. I'm in the mountains of Washington, so it's
Oh,
we
okay.
just we get winter like 2 months earlier than the rest of the state.
Oh my God, it's so nice there. And there's no
And
tax, right?
there's tax here, but if you go into Oregon, then you don't have to. Yeah, then you don't have to pay the sales tax, but you do have to let other people pump your gas. So it's a trade off.
Got it. Got it.
So if other people are pumping your gas, is the gas more expensive?
I don't know, but I never know. And maybe if there's any Oregonians in the crowd, like I don't know if you're supposed to tip the people that pump your gas or not, but it's kind of weird because if the gas station's super busy, you have to wait for the attendant. You can't just come in and pump your gas. I don't know. There's I don't know the etiquette around it. Like I just want gas and then go. So yeah, usually I fill up in Washington before I go over the border to get gas.
I can identify with that. In Long Island, there's two different counties. In one county, you can pump gas. In the other county, they pump gas for you. It's kind of like liquor stores. How sometimes in some states they sell liquor stores and drugstores, and it's God knows what all this means.
Yeah, I remember when I was driving the Alaskan Highway years ago, there was a place in Canada that had a drive-through liquor store, and I thought that was really convenient.
Hmm.
That if after being on the road for like 8 hours, you don't even have to get out of your car to buy your alcohol. You could just keep going. So the U.S., yeah, we haven't. I don't know. At least where I am, we haven't caught on to that yet. And good morning. I see a lot of faces in the crowd. Ruston. Good morning, Shawnee, Mariana, Pocha, Dr. Drip. Good morning, everybody. Welcome.
Okay, well, I just saw Michael's on as a listener. So.
Yep. Michael is connecting right now to the speaker panel. Oh, and I don't know what happened. Let's try again. There he is. Hello, Michael. How are you today?
I'm doing very good. I had some technology issues. Sorry.
I'm so happy you're here.
I wasn't connecting that well.
Good morning. Thank you for being here.
You're welcome.
Hi, Michael.
Okay, so before we begin, I would like to invite anyone that's listening, if you have any tax questions at all or questions for Gregor Metis, please feel free to request to come up to speak and we'll get you up here. And of course, welcome Jerry and welcome Michael. Thank you so much for being here today. Could you tell our listeners a little bit about Prager Metis?
Yeah, Michael, maybe I'll jump in on that one.
Sure.
Because I've been here a little longer than you. Well, the Prager side goes back like 100 years. That was an accounting firm that kind of specialized in entertainment. I mean, going back to like Charlie Chaplin, literally, And then the Metis side was just a traditional accounting firm. And there was a merger, and we're a big firm. We have about 500 or 600 employees and partners, and in multiple states, and even an office in the UK. There's a bit of a specialty in the entertainment field. There's some tour accounting that we've done in the past, but it's a traditional accounting firm with separate divisions. Do a lot of personal tax returns, a lot of corporate returns, partnership returns,
Oh, Jerry, may I jump in here real quick? Michael, could you mute your mic? We're getting a little bit of feedback.
Sure.
Thank you. Sorry about that, Jerry. Continue.
No, but it's we're just a traditional accounting firm with a bit of a focus in the entertainment area. But we have many clients, some large, some small, and just been around for a long time with a lot of experts in a lot of different fields. And like any other place, we have some people that don't know what they're doing, like Michael and me. That's a joke, guys. You know. So anyway, so
don't worry, I can share. I mean, I personally here, I don't know what I'm doing.
Yeah.
Yeah, me neither.
Yeah. So I've been around for, I've been, I'm actually a partner emeritus now. I've been doing tax work for literally 35, 40 years. And, I'll let Michael speak for himself. But, and I was actually a real estate tax specialist, transactions and whatnot. And now it's virtual land. So I guess Michael could jump in now. If he's there.
Sure, Jerry. Yeah, and again, and now you are in the virtual estate business, so yeah, you've kept that real estate stuff going. So I joined this firm in 2020 in the middle of the pandemic, which was a perfect time to make a move in any business. And my background and experience is on the tax side. I got involved with digital assets probably about 7-8 years ago, maybe a little longer than that, when a client of mine started to invest in Bitcoin and was very confused about the tax treatment. I was very confused about the tax treatment way back then, but in the last 6-7 years, I learned a lot about what issues that are out there for people that are involved in this space and addressing the limitations or the lack of regulation that we have, in this space as far as formal regulation.
So tell me, along with your early clients' purchase of Bitcoin, did you also purchase some Bitcoin?
I have a couple little things lying around, not that much. My wife, controls some of the purse strings, and she was nervous, so we just did a little bit just to say we're in it.
Gotta get in early.
Suffice it to say, we both do own some crypto. I own NFTs, and we're in the we're living the dream. So and like Michael said, there's there are no rules and there are rules, and that's what we can kind of get into today. How do you navigate really in this situation when you kind of like, you're supposed to do certain things, but yet it's not definitive.
I see. And this might be like kind of a general question. Maybe as the conversation continues, we can kind of get more into depth with it. Like, what are kind of like some general rules that we should know?
Well, I guess the biggest rule to be aware of is that in the U.S. under the U.S. tax law, transactions involving digital assets of any kind, whether it be cryptocurrencies or NFTs, do lead to taxable transactions. So if someone was, as an example, to take some digital assets, say or a coin, say Ethereum, and purchase an NFT, there is a high likelihood that not only did they buy the NFT and buy an asset, they also entered into a potential taxable capital gain transaction in the fact that the sale of that or the use of that Ethereum is deemed to be a sale of an asset, unlike fiat currency, US dollars. digital currencies are not treated as such. They're treated as property under the tax law.
That is interesting because, like, at least, you know, spitballing with all my community members, it seems like the whole mindset of them, like, the mindset is, you know, when you purchase the NFT, it's not taxable until you sell. But from what you're saying, it's a taxable asset upon buying it.
If you buy it, yeah, well, it depends what you bought it with and how much you may have made money on your crypto that you bought it with. If you buy Ethereum at $1,000 and you bought an NFT, you know, that's $1,500. Well, you know, think about what happened there. You made some money.
And that's the issue right there, what Jerry just said. If I purchased my Ethereum for $1,000 and then I went and took that $1,000 purchase price of Ethereum, it appreciated to $1,500. I purchased an NFT for $1,500 equivalent US dollars. That is a taxable transaction under the US tax law. So there will be a $500 capital gain on that transaction. It's one of because the IRS to date has only considered digital currencies as property. They're not treating it as currency. So it's not the same as I have $1,000 in cash and I purchase, you know, some tangible property of $1,000. You know, they don't treat the, you know, one Ethereum as a currency. So if I purchased one Ethereum and then I took that one Ethereum and purchased an NFT, the value of the Ethereum in US dollars is what creates the issue, because it's not considered a currency for US tax purposes. It's considered a piece of property. So think of it this way: if I, you know, this is old in the tax law. If someone did services for you in exchange for goods or in exchange for other services, so I'll prepare your tax return and you'll give me a gold watch, as an example. The value of that gold watch is income to me.
Yeah, exactly.
That's kind of the way that the tax law has evolved over the years, and how this space is treated for this purpose, as far as the Ethereum in my example is considered an asset or an intangible asset. It's not considered a true currency like a US dollar.
Michael, that's an interesting point, though. The service aspect is very interesting because, you know, in a business, so let's say I pay a genius like Tangpoco, who might be on the corner, for services. You know, if I pay, you know, if I pay somebody, if I made money on the crypto that I'm paying in, I've got a gain on my transaction. You know, that's the way it works, because it applies to services too. You know, you can make, you know, I mean, it happened to me in our little business here. I paid somebody in crypto and I had a capital gain. I had a double transaction.
So I would like to welcome Rustan up to the speaker panel. I see his hand is up. Would you have a question, Rustan?
Yeah, so I just wanted to ask, on the flip side, if you buy the ETH for 1,000 and then the same amount of ETH you end up during a bear market buying an NFT at a loss, is that counted as a loss?
Yes, because it will be under the, you know, the way the IRS or the, you know, the tax authorities look at it in the United States, that would be a completed transaction. So I exchange my ETH for something new. So in effect, I sold my ETH. And if you would purchase it, say, for 1,000, and then it dropped to, say, being worth 600, I took that ETH worth 600, purchased an NFT. I now have a $400 capital loss. And I have an NFT that I purchased for the equivalent of $600 US dollars.
Okay, great. So I have a whole bunch of NFTs and we're in a bear market, and you guys feel free to buy all my NFTs and claim that loss.
Only up to $3,000. Or you can deduct it against capital gains.
So on the lines of capital gains, that's a certain period of time that we would want to hold something before we sell it? Is there a time period that you can kind of advise? Is it a year? Is it a specific amount?
Generally, if you hold a capital asset for a year or more, it gets preferential tax treatment in the form of a reduced tax rate, the capital gains tax rate, which can be, depending on someone's income, as low as 0% and as high as 20% plus the net investment income tax. Where if you sold it and you held it for less than a year, the tax rate could be as high as 37% because it's treated as ordinary income. So there is a benefit from a tax point of view on gains if you hold digital assets for a year or longer, because then you get that preferential treatment. The only issue that comes up is that, within the space, and there's still, discussion or issue over if you were to sell an NFT, what is it? It's an asset, we know that, but is it a collectible? Because if it is, then it has a different tax rate, which could be 28% if it's held for over a year.
28% in the U.S.
On the U.S. side, U.S. capital gains tax rate. Again, this is for U.S. purposes.
Michael, can you help define what a collectible is for people?
So, sure. So a collectible would be a piece of art. A collectible in this regard would be gold bullion. That would be a collectible in this definition of how the IRS looks at it. And some NFTs are probably art related, and some probably are more not. So that's always going to be the issue as to what is your holding of your NFT. Is it because it's something pretty to have on your phone, or is it because it's something of a true computer software? And that's where the debate's going to happen, I'm sure, in the coming years as people start to sell these and probably make some pretty decent gains on their investments in this space.
So in our world, there's a lot of wearables being bought and sold. Would a wearable be able to be considered a collectible because it's an art form? But I'm looking in the audience thinking about how many people are, buying and selling wearables. And that's a huge implication if all of those have to be claimed as well.
Well, if you're buying and selling wearables, obviously under our tax law in the United States, that would be a taxable transaction. There always is a debate out there about, there are certain games that have wearables that are in the game and they can't go out of the game. That right there at this point in time has been treated as not a taxable transaction because you're not necessarily gaining any financial benefit out of having a wearable within the confines of a game. The issue will come down if you sold that wearable outside of the game and let someone else buy it from you so they could use it.
Can I?
So wearable NFTs in Decentraland that would not be considered taxable? Sorry, go ahead.
Yeah, it would depend on how what's being used with it. Again, if you're selling your wearable to a third party and now they have all the rights in it and they gave you, some form of compensation for it, that would be income. Yes, it would be, a sale, and then you'd have costs to offset that.
I wonder if it would be a collectible. I don't think so. But...
So, as somebody who has ice wearables in the poker ecosystem in DCL, and we've spoken to a CPA about this as well, those are basically like a tractor in a sense, like they're an income generating asset. So collectible aside, these are things that produce income for a particular individual, and that's how they're treated. So that's all income, and if you buy and sell the asset, that's a capital gain or a capital loss.
Yeah, I would agree with that.
And who like the owner of these assets is responsible for keeping track of all this, or like do you just bring your
Absolutely.
MetaMask wallet to an accountant and then the accountant goes through it and like figures it out? Like I don't like. It's just so.
It's tough.
We have 30 different wearables, and we keep track of this with a CPA on a quarterly basis, and we have a ledger that keeps track of every income we get every day for each ICE, and we were able to get, as long as the IRS cares about consistency, so as long as we're claiming this as income on a daily basis at the same time, that way we're able to generate this as like an income statement and then have it on a balance sheet as well. It's a pain for sure.
I would agree with that. That consistency is the key. You know, I've tried to get this. It's almost impossible to get this thing right. You got to be a compulsive maniac, literally. You know, and the bookkeeping it's intense. It really is. You end up having to use CoinTracker and QuickBooks, and a combination of a CoinTracker and actually the blockchain. You know, so it's not easy. But I do think consistency is the key, and almost doing the best you can, is the key, really. But
yeah,
because
I want to, like, if I get audited, I just want to send the pile of paperwork to the auditor and say, have fun with that.
Yeah.
The problem with that position, though, is the way the IRS does audits. If you sent them a box of papers and said, "Here, have a good time," they're going to disallow all your expenses.
Yeah,
they're not going to figure it out. They want you to show them the roadmap. They're not going to accept the box, the old, here's my shoebox of expenses, IRS, you figure it out. They're going to say, no, you figure it out, Mr. Taxpayer.
But then couldn't I just quotation figure it out, and then they still have to review it?
Correct. They review it, and they want to see the support that you had to develop what your transactions were. So if you said,
but so my figured out box could be like, have fun with that.
No, but you have to report it. You have to report something on your return. You can't just, you have to do something that they're going to check. So if you leave it out, there's one other thing on the tax return. You have to check off that you have crypto transactions. You can't. There's a box. But aside from that, you can't ignore it and say, okay, on an audit I'll tell them. You got to pick something up, I think,
So is like Zenledger or CoinTracker enough, or like, do you have to go further than that?
I mean, I was doing, I'm sorry.
Well, I was just going to step in there and say, like, last year I used CoinTracker, and it's very beneficial because not only can you put in your MetaMasks and multiple addresses, but you can put in your Phantom wallets, you can put in your Coinbase, you can put in your Gemini, your BlockFi, and it does consolidate it. One thing that you have to watch out for is that after it consolidates it and exports it, some of the exchanges, namely Coinbase, I noticed last year, in some exports would either duplicate transactions or wouldn't have like one end of the transaction. So after I exported through CoinTracker, I did have to download an Excel document and then kind of manually go through some of these accounts and figure out, like, okay, for some reason this account has like 7 ETH in transactions, but I can only account for the account receiving 5 ETH. So how did I do that? And I, made some consolidations as best I could. And then I handed that off to my accountants. And that sheet that I gave them they were able to use, and it was totally fine. But in general, CoinTracker was like very good to use. And then you just have to do a little bit of consolidation or, I guess, tracing things down on your own.
The one thing good about CoinTracker was they actually picked up transactions that I couldn't see even on the blockchain, They picked up everything. I knew there was something. I didn't see it on the blockchain, and they actually somehow picked everything up, because I found it very useful, really. Also. And Ian, it's nice to hear your voice, man.
Yeah, how's it going, Jerry?
Good.
One other thing I think that Rustan, you touched on is the purchase and sale of the NFTs and the tax implications of that. And so it is like, once you own the NFT and you sell it, now you're paying taxes on the NFT, but you're also receiving some cryptocurrency, which could then go up or down in value. And so you want to be smart with your timing on the purchase and sale of the NFT assets, because at the end of the year, when you plug everything into CoinTracker, your account, you could be like, oh my gosh, I made so much money money last year, and then you realize you had 2,000 transactions and that you were paying like micro taxes on every transaction and you owe a bunch of money. And it's like, if people don't be conscious of that throughout the year of transactions, then at the end of the year, you could end up owing, you know, like $30,000 in taxes, but you already spent all of your earnings thinking that you were good.
Well, Michael has a great story about that.
I can speak to that because probably about 5-6 months ago, we interviewed a potential client that was involved with staking of cryptocurrencies, and you know, he made the equivalent of $1 million US. Turns out that, you know, 6 months later, the particular currency he was involved with disappeared. It went to nothing. And, you know, he had to sell it for nothing. He got zero, but he still had $1 million of income to report in his tax return, and he had no money to pay that tax. So whenever you're getting involved in digital asset transactions, you always want to remind yourself that, you know, there could be a potential tax. And, you know, if you want to keep the proceeds in a volatile asset, you do still owe the tax, even if that asset depreciates. I mean, just look what's happened in the last, 7-8 months in the cryptocurrency space with the wild fluctuations and the devaluations that have been happening recently. If I was paid in Bitcoin, when Bitcoin was trading at $60,000 equivalent, well, gee, I still owe tax on that $60,000, even though Bitcoin is not worth that anymore, and I didn't liquidate it into a fiat. The IRS doesn't care because they don't take Bitcoin as payment or Ethereum as payment. They take US dollars only.
So I do have a question there. Hypothetically, I sell something and say I get Ethereum at $2,000. Ethereum goes down to $1,000, but it's still before the end of the tax year. So I sell that Ethereum and I take a loss on that asset, but then the next week I buy it back still at $1,000. So essentially in that situation, would I be able to write off the loss that I took from Ethereum for the current year and then just have to worry about potential gains in the following year?
Yeah, at this point in time, there's a concept in the tax law. It relates to securities, like traditional securities, your IBMs, your Microsofts of the world. It's called the wash loss rule. And that rule, which says that if you sell a security and then within 30 days buy it back, if you had a loss, you can't take the loss.
Yeah,
it's
an
old rule.
It's a loophole. It's a total loophole.
Right
now,
and
because now, hypothetically, what if I take the loss in one wallet, but I make the purchase back in another wallet?
Well, the thing to be aware of here is that under the law today, the wash loss rule does not apply to digital assets. It only applies to securities. So people who sell their Ethereum or their Bitcoin today and have a tax loss and then buy it back tomorrow don't have to deal with the wash loss rules. The only thing to be concerned about is if someone's doing it regularly and doing it a lot. There is a concept in law called step transaction, where the IRS has the ability to take the steps involved in multiple transactions and treat them as one. So if you're going to be doing a thing like that, where you're going to be selling to harvest losses and then immediately buying back, if you're going to do it a gazillion times, you're going to probably run into some trouble. If you're going to do it a few times, you'll probably be okay because there is no wash loss rule yet. There's talk about putting it into the tax law, but it hasn't happened yet.
I mean, for now, I think only funds would be doing that, I think, at this point, probably.
Well, I will say something interesting is that the LooksRare NFT marketplace, when it released, it became one of the highest trading marketplaces, namely with Meebits being traded. And the specific reason was because on the Meebits collection, there was a 0% platform fee or 0% royalty fee. So there were people that were wash trading Meebits because every time you have a successful listing and transaction on LooksRare, you would earn looks and then be able to stake it. And so LooksRare became the go-to washing platform, like in the crypto space. So I feel like a couple of those people, I mean, there were like thousands and thousands and thousands of transactions in some cases, like between a single account and another single account. It's ridiculous.
So I'm going to jump in here. I've got a question in the Twitch chat. What if you have your crypto in VGX and they go bankrupt? Do you guys have any advice for that kind of situation?
Well, if you're holding an asset and then that asset becomes of no value, that would be potentially
Casualty
a capital
loss?
loss. It would be a capital loss. A capital loss because you're, in other words, let's say I held, and I'll be extreme on I held IBM, and IBM went bankrupt. I have a capital loss now. Same thing would happen here. You'd have a capital loss if the underlying security or underlying asset eventually had no value and collapsed upon itself.
Is it the asset or is it an exchange that we're talking about there? I just want to understand, just to make sure.
I have a
I'm just translating the question, so I'm not sure about details. But it's if you have your crypto VGX and they go bankrupt. So I'm guessing if it was in an exchange.
Okay.
Yeah. And so I guess I would also ask, like, if you lose your asset, what are the protections around that? Or is it just, I'm thinking like if you bought land, let's say you bought a 10 parcel estate and then lost that, would there be?
Oh my God, it's my greatest fear.
I know. I'm just wondering.
That's potentially an issue because if you lost an asset, again, you didn't lose it, you forgot your
key,
your password, make it simple. It's still there. You still own it. You just lost your password. So you didn't really lose the asset yet from a tax point of view. You've got to go out and exhaust all opportunities to recover it in order to say you lost it.
Do you think you can get a casualty loss on that? I wonder,
One question I have is about dividends or staking rewards that get placed into sort of an escrow wallet that you then have to go claim. Is it correct that until you claim it, you don't count it as income? So if you just want to let it grow and it's not particularly yours or in your wallet, what's that situation?
You have rights to it.
That's a big it depends. If you have to, and that this is actually in the IRS Q&A that's out there. If you have to do something to get it above and beyond what's considered maybe normal, it's probably not going to be income. But if it's yours and they put it in your wallet, it's yours to have, and you can dispose of it as you see fit, it's going to be income. But if you have to do something extraordinary to get it, it's probably not going to be income.
And that's the same with like airdrops, right? Like if you got airdropped ENS last year and it was $45 a share or a token, you have to claim that as the value that you received that income, regardless of the price of it right now.
Correct. Yeah. So when you get something, that's when the income. It goes back to the individual who had the staking income that I talked about. He collected income from his staking positions, and it generated a 7-figure US dollar equivalent. He kept it there. He didn't liquidate anything into fiat to deal with taxes. And then when it came toward the end of a year, that particular crypto asset became no value, and it continued to be no value, but he still owed his tax with no fiat to pay the tax on $1 million plus of income. So it's when you get the asset that when the income is reported, not when you decide to sell it. There's been some talk. It came out in the Gillibrand proposal to treat that kind of a transaction. In other words, I get an airdrop, to not treat that as income until I actually sell it. that was in that proposal that was being put out there, but that one died in Congress. Hopefully, and there's been a push for that. There's actually a couple of cases about this area too, with staking in particular, that, until you actually get and use the coin, to make it income at that point, as opposed to when it gets dropped into your wallet. There's been talk about changing that, but right now it all comes down to dominion and control. If you can control the asset, it's yours.
I could see that being a huge implication, because how many like NFTs do we have airdropped into our wallets that are, scam NFTs, or just wanting us to click on a bad link? I mean, if we're liable for every one of those because it's in our wallet, we have no control over whether it gets put there. And I can see somebody with like intent really having a heyday with that one.
I mean, I pretty much ignore airdrops, so I'm sure, God knows what I have. So I mean, I totally identify with what you're saying.
Right, and in the case you're talking about, in order to get that airdrop, you have to do something. So if someone dropped that into your wallet and you did nothing, it's not income, because you didn't do anything, you didn't grab it. But if you take it, then it will be income at the value it is at the time you get it. So yes, there could be an issue when you have people dropping things into your wallet, you're clicking it, and then next thing you know, it's a rug pull and it's worth nothing. You do have that potential issue out there, yes.
Well, public service announcement: don't click the NFTs that are airdropped in your wallet. For now, we've got one more reason not to click those. I see a lot of questions.
It's the same as you get those emails from your long lost cousin in Nigeria that has $10 million for you. You don't click that one either, because those still come to this day where people are getting that email. I get that email at least once a month about my long lost cousin in Nigeria who was a prince.
I know. I think somebody got there recently and posted about it.
Yeah.
We've got a lot of hands up. I think everybody's probably getting really good questions. I think CK was first, and then I'm going to try to get to everybody. CK, you've got the floor.
Hi, thank you. Apologies if y'all have already sort of addressed some of these things. I was in a work meeting and unfortunately unable to jump in until recently. But my questions, I assume the answers are yes to most of these. But if I make like USDC through a contracted, payment, I'm assuming that's taxed. And then if I then take that USDC and pay somebody else who is under contract with me, I mean, that's taxed. And then should I be doing this all under an LLC? I imagine that's a yes versus an individual.
Well, when you collect, the digital asset as compensation for services, it's income based on the value that you got on the day you received it. If you then in turn take that digital asset and you're talking about a stable coin, so the valuation is probably not going to change. That payment to that other person would then be a tax deduction to you. So let's say you collected the equivalent of $10,000 US in a stable coin, and then in turn you paid $2,000 to your assistant. Well, you would have a tax deduction for $2,000. You'd probably have to issue that person a form called 1099 for that service. You would report your $10,000 of income correct. As far as the structure of your business, a lot of that's more of a legal question than a tax question. But in many cases, people do set up their businesses as a limited liability company or a corporation, by example, more for the benefits of legal protection as opposed to tax benefits. That's where most of the benefit comes from having a separate legal entity.
Mike, I want to just bring up one thing. Wait, do you on a stable coin? Do you think you need to show a sale?
I believe, and I'm advising people that if you do, use stable coins, because it is an asset, it's not a currency, even though the term is used as currency. It's an intangible asset. I mean, you're selling an intangible asset that results in zero gain or loss. But it could theoretically drop above or below that benchmark. We've seen some stable coins in the last 6 months disappear. They weren't so
Right.
stable.
Yeah.
So
That's
I would think that would have to be reported as a transaction, as a capital gain transaction, but there'd be no gain or loss. You'd just be
right.
reporting
So I just
gross
want everybody to
proceeds
be
and
clear
expense.
on that.
Yeah.
That even that might have to be as a sale, as impractical as it is.
Yeah.
to
It's
ju-
again, a lot of unfortunately, a lot of the way the regulations are today, a
It's
lot of
terrible.
it is like a ton of extra work for really no gain to the person who's conducting the transaction. So the tax and accounting side of digital assets is very, very there's too much that has to happen as far as reporting goes these days, and I'm hoping that Congress addresses it. We'll see.
And then if I've given land as payment for services, is that taxed the same as a stable coin would be?
Yes. So
100%.
if the land had value, and let's say the land was worth the equivalent of 10,000 US dollars, you would have $10,000 of income. Yes.
100%.
Okay, great. I think that was everything for now. Thank you.
Thank you. I see. I think Rustan had his hand up. Then it was DCL Curations, and then Matthew. And then I would like to ask a final question because I do see that we have maybe about 15 minutes with you. So I would like to also cover like a DAO, like receiving funds from the DAO from a tax perspective.
That's
But
important.
let's go over to Rustan here first.
Like I'm pretty sure I'm not alone in feeling how freakishly overwhelming this all is, and how it makes me just want to quit everything and get a job at McDonald's, because I don't think the government's going to give me a hard time for working at McDonald's. But like where are you guys, the accountants, based? And because I'm overwhelmed even just approaching a local accountant, expecting them to know anything about crypto, and it's like I just want to sit down with somebody who can help me.
Well, that's a big issue that's out there today. The space is evolving every day, and Jerry, myself, and some of my other partners, we do a lot of reading and a lot of brainstorming. This is a space that's very, very specialized, I guess, from a tax and accounting point of view, because there is so many complications, and because when you get that Excel spreadsheet, it's not in English language, it's in numbers, and a lot of people don't understand the ins and outs of it. So if you're going to be talking to an advisor, you want to make sure that they have some form of experience in the space, and actually work with people in the space, and as was brought up earlier, maybe have some skin in the game. I mean, I don't hold a lot of crypto assets, more because my wife won't let me than anything else. But Jerry has NFTs. Jerry has cryptocurrencies. So you want to make sure that the person knows the ins and outs of this space, not just they know debits and credits, or they know what
But you can send us an email though. Send
You can, yeah.
me an email. That's what I would do. And we'll
Where
get you
are
some.
you guys based?
Well, we're in New York and California. We're all over the place. I don't know.
We have offices. We have offices in New York, California, Florida, the
London.
DC area.
I would say
Jerry is pretty much digital these days, so we're there too.
Yeah. Send me an email. We should get your contact info, and we try to help you, or at least lead you. I will say one thing. I don't know. Somebody spoke before about they were staying on top of their transactions. Oh wait, so now you're probably way behind on keeping track of what you were doing, but it's a lot easier, and I made the mistake too. So it's like you can't wait and do this stuff like 6 months later. You almost have to keep track every second, or else it's like anything else. It gets overwhelming. It's like life, but you got to somehow be a little compulsive about this thing, so you actually understand what you did. How much you paid for something, and what's going on here. But we'd be happy to help, or at least maybe lead you, and I could probably just talk you through it, a way to organize it. Otherwise, if you start going to an accountant and give a shoebox Forget about the IRS. They'll charge you a fortune. That's the problem here. I spoke to somebody recently, and I kind of walked him through what he had to do, and it was fine, you know? I helped him.
Can I just ask what that email is or how we can contact you?
No, yeah, it's Jeitel at Prager, Prager, Metis, METIS.com, one word, and we'll just try to help, you know, and then I could, you know, I don't mind talking to people because, I mean, I am a partner emeritus and I got into this space and I've learned a lot about it, so at least I could kind of calm people down. It's kind of like I'm a psycho crypto accountant, let's put it that way, in many ways, but you just don't want it to get overwhelming. It could be managed.
I feel like just from the questions that I'm seeing in world, in Twitch, there's talk of like moving to another country to evade taxes because this is all of a sudden really overwhelming. I mean, honestly, if you guys had seminars to help us metaverse people, I'm sure that people would take you up on that. But definitely, hopefully we can have some solutions.
Let me bring something up. We just opened our office, and believe it or not, and this is actually worth talking about, I had a meeting with Walters Kluwer, who owns CCH. They're the biggest, I think they're probably the biggest tax software company around. That's our tax software company. And believe it or not, they just bought space in Decentraland. You know, I somehow talked them into it. So, but anyway, I mean, I just think that's pretty amazing that a big software company just bought space there. So help is on the way, I think. But, you know, I don't think you could just leave the country to get out of it, though, because they tax you. They tax you on worldwide income, anyway. So.
I think that's just the go-to for everybody. Yeah. Go ahead, CPA. You were going to speak.
No, I was going to just you know, reiterate what Jerry was saying, that you know, as far as, you know, if you're a U.S. person, you know, the long arm of the IRS gets you wherever you are. Unfortunately, you know, in the United States, you know, we all know you can't avoid death, but in the United States, you can't avoid taxes as long as you're a citizen. But there are strategies that people can do to, you know, take benefit or get a benefit out of the way our current tax law is. There are structures that could be, you know, created and used, and we've been working with a number of collectors in helping them structure their organizations in a way that could be more tax efficient. Again, by utilizing some of the tools that are already in existence in our tax law. So there are things that could be done. You know, it's expensive to set it up and do it. So it's not going to be efficient for someone who's got, you know, $2,000 or $3,000 invested in NFTs. But for somebody who has a substantial investment or stake in assets, there are things that could be done to help minimize that U.S. tax exposure in a legal way that'll let you sleep at night.
Thank you. I mean, I think that we will just have more questions from this point on. I think DCL curations and then Sinful had a question.
Yeah, mine was actually going to be on Sinful's note because it's interesting, like DCL, like Decentraland and the foundation, it's not necessarily like a business entity. And so when they give out these grants, I think a lot of people have questions on, you know, does that grant now, you know, is that revenue? And it's not a government grant because typically grants are like U.S. government grants, talking in the, you know, U.S. realm, but when it's coming from a decentralized entity, you know, what does that look like?
Yeah, actually, Michael, I spoke to Matt Bond yesterday, and he was basically saying how Decentraland funding a lot of grants now. So, I mean, do you have an opinion on that? We should research that, I think.
Yeah, but I would think that if you're getting something of value, and there's something that can be pegged to a US dollar equivalent, it's going to be income.
I think it's going to be income too.
Because you're
But
getting something of value from somebody. Is it a gift? I don't know. Is it, if it's in the business standpoint, businesses can't collect gifts, businesses collect income. So it's more than likely, if you're getting something of value in the form of a grant, or it's called a grant, it's probably going to be taxable income.
which reminds me, so you want to certainly try to spend it before the year is over. So if you have income, and if you got a grant now, you want to make sure you kind of spend, take some expenses against that in the current year at least, so you don't have a tax liability. The one other thing on the international side, there is international reporting too. So if somebody pays somebody overseas, there's certain forms to have. Like if you pay a U.S. citizen like over a certain amount of money, or U.S. resident, they're supposed to issue a 1099. But if you pay somebody who's overseas, there's other forms involved that you're supposed to receive from them. So there's just a couple of crazy compliance situations that are not hard to deal with, but you just have to deal with them. So maybe there's probably more talking necessary in the future on some of these compliance issues.
So to protect the creators in the space for compliance, like I'm thinking a lot of the people in this room have received grants. A lot of the people create wearables. Would you suggest creating an LLC and making your DAO, grant that you receive, that is separate from you? Would you suggest that for creators?
What Michael said before, I don't think you should do. I think a lot of people make the mistakes of doing things for tax purposes, and when there's really protection, there's a legal reason to have an LLC. Because if you own your own LLC, it goes on your personal return. Literally, you ignore the LLC; it's called a disregarded entity. So it goes right on your personal return, and it's not really separate for tax purposes. So I'm not sure what would the effect be on a tax. It's not going to protect you for tax purposes, if that's the question.
Yeah, generally an LLC is more for legal reasons because it's a limited liability company, which is what the term means. And it's to limit liabilities from a legal point of view, but not necessarily from a tax point of view. Because again, as Jerry said, LLCs owned by a single member are disregarded entities, which means whatever the owner is, that's whose tax return gets it. So if I'm a person and I have an LLC to operate my business, that gets reported on my tax return on a form called Schedule C for a self-employed person.
Yeah.
If I just hung a shingle on a wall and said I'm in business, I report the same way with or without the LLC. So there's no tax benefit to be had by having an LLC just to have an LLC.
Yeah, it might protect you for some legal, if somebody sues you maybe or something like that. But I think it's a great segue into DAOs, if you want to talk about entities and stuff like that, if there is a time limit,
I mean, the time limit is only as long as you can stay here.
Well, I mean, I'm here. It's up to, I mean, I could just keep talking a while. So it's up to Michael. But just so an LLC with one person is a disregarded entity, but an LLC with two people, that's a partnership and that's a separate entity. So there's a reporting entity involved. So and then there's a whole other tax return. There's S corporations. There's all there's different types of entities, but these are kind of legal questions really. But if somebody, I think, Cynthia, you wanted to talk about DAOs, and the question is, what kind of an entity is a DAO? And there's where the law is totally, I don't think it's written yet. Michael, you agree with that? That it's...
Yeah, that's an area of concern because, what is a DAO from a legal and or tax point of view? And that's a big question. And, and, is it a security? Are you buying into an entity that has securities being issued? Is it just, a group of people that get together and make decisions, or, is it something else? And that's a big question. And I think it's not going to be answered for some time from a legal compliance point of view. I mean, there's thousands of opinions out there probably as to what DAOs really are from a strict compliance point of view. But if you talk to the SEC as an example, they're going to say it's a security. If you talk to the IRS, they're going to say it's a partnership or a corporation or association, something to tax. So it's still out there. It's still a little bit iffy as to what that may be treated as from a legal and or tax point of view. And there are lawyers out there creating these things that are getting tons and tons of money to try to dot the I's and cross the T's to make sure that you don't go into some bad space.
Right. It's totally great because, for instance, who would even sign a tax return? Is it foreign? Is it domestic? And if it's a partnership, theoretically, you have to supply what they call K1s to all your partners now. I mean, there's so many problems or potential pitfalls with these DAOs. I don't think we've seen at some point, there's going to be some issues, or maybe they'll just grandfather everybody that did everything up to a certain point. They'll just say, okay, you did it, now we have to report it a certain way or something like that. But
I was going to ask that question. I mean, there's I don't know if the correct term is the statute of limitations, but there's a certain amount of time, I think it's 6 years or 7 years that the IRS has to come back. Would we be liable in the future in 5 years from now if we didn't claim DAO funds, at this point, or would they grandfather us in, do you think?
Well, it's the IRS statute to look at somebody is generally 3 years to look back for audit purposes. That's the general rule. It sometimes can extend to 6 if they consider something to be fraudulent. And fraudulent is a definition in the law. It's not necessarily someone committed a fraud. It's just it's a dollar definition. And the other thing is, if something is never reported, that means you didn't file. That means technically the statute is open forever because you didn't report it. So does the IRS go back 20 years after people? Yes and no. If someone had $1 gazillion 20 years ago, they may do it. But generally they don't do that except in extreme cases. But and again, I don't think we're probably talking about extreme dollars in many of these situations. Most people are getting to the DAOs, or they're getting small transactional things out of it. Maybe the big promoters is who they'd probably go after way back.
I mean, the only one I could see that got shut down because I happened to have a couple of these gambling apes, and then all of a sudden they kind of disappeared on me. They got shut down by the SEC. They said it was a security, and so they had to you can't sell them, you can't buy them, on OpenSea or something like that. So there is some activity. They got shut down, I think, by Texas or one of these states. There is I think there has been some action on this stuff, but I'm not sure where this is all going.
And Jerry brings up a good point there. We've been talking about the U.S. Aspect of things, but a lot of the states now are getting involved in looking at this area. Recently, I read an article about the sales and use tax and how the state of Pennsylvania, as an example, believes that if you sell an NFT, it's subject to their sales and use tax.
I saw something. Washington too, maybe. I'm serious.
There's a few states. There's a few that are jumping on the bandwagon here, but again, while everyone fears the IRS and fears the SEC, some of these states' attorney generals have more power at times because they're dealing with just their state as opposed to dealing with the entire country, and it gets to be a little more difficult to do things. I mean, just look at today in the news. How you feel about this individual. The New York State Attorney General today just sued Donald Trump for fraud. I don't know if the federal government could have done the same thing as quickly, and even though it's taken years for New York State to build its case that it claims it has.
But states could they have a sales tax. Some states on digital assets. It's pretty simple, and it's a very easy thing to do. And every state has different rules. So the average person doesn't quite see these things. Even accountants have problems figuring out. Sometimes we can't figure out. Okay, a client's done business in a certain state. They owe sales tax in that state, and you don't even know what's taxable because every state's different. Speaking of that, where is somebody doing business? Also, is another question. Do you have they call a nexus? Are you doing business in New York? Are you doing business in Washington? Or there's other filing requirements? We're getting people crazy probably here. But
As far as crypto and taxes go, what country is the hardest to be compliant in?
I think you're here.
I would think the United States, because we're overly, we have so much regulation and so much things, so much reporting that contradicts the other reporting, and so many duplicate reporting purpose requirements. I mean, you file an income tax return to the IRS, you file one to your state government. In some cases, we're in New York City, there's a local tax. If you're in Los Angeles in a business, they have a local tax. So, I think we have one of the probably, more stringent requirements as far as reporting things here in the United States, probably compared. I mean, I'm sure there's other ones from other countries, they'll say it's worse, but, ours is not easy.
But the irony is that this is considered like the easiest place to launder money, I think, or for foreigners to park their assets. I think this is the number one country. So it's kind of a little ironic, actually.
I think the follow-up question would be, what is the easiest country? But I think then we'd have a bunch of people in the room like buying plane tickets and packing their bags to go there.
Yeah, well, you still have to pay taxes here,
Yeah, unfortunately, if you're a U.S. person and you leave the country, and you don't, give up your passport, you're subjected to U.S. tax forever. I have one of my cousins. He worked in Bermuda for years. Bermuda has no tax, but the IRS still wanted to tax him because he's a U.S. person. So they get to tax you for everything. Unfortunately, that's just the way our law is written. A lot of other countries don't have the same kind of law, but we do.
There's actually an exit tax. If you have a lot of money and you give up your citizenship or something, you have to pay an exit tax to leave.
Go to a place with no extradition. Cough, cough.
So basically, we got it. We just probably should learn as much as we can and commit ourselves to paying some taxes. Zesty, you've had your hand up for a while.
Yeah, so I actually have a couple of questions. So, first one should be pretty straightforward. So let's say I decide I want to buy something on OpenSea, and I use MoonPay with a credit card, and my email I get back has a US dollar amount, and then I just never sell that. What does that look like from a tax standpoint, according to the current rules?
So you purchased an asset, is what you have. So you went out and you used some dollars. Like, what if I went out and purchased, a can of Coke and left it on my counter? I just have an asset. Or I went out and bought a share of IBM and did nothing with it. I have an asset. There's no taxable transaction for that because you're using using fiat in the form of your credit card because it's a US dollar transaction. That's straight what you did.
Okay. So my next question. So Decentraland has this one game, Ice Poker, And this actually relates back to something you were talking about earlier with having to do some extraordinary action or whatever. So when you play the game, you earn their altcoin called ICE. It's in it goes down in value over time, or at least that's what when you look at the chart, that's what you see. So you have to build up its 2,000 ICE, which is a little over $12 at the current rate. And so what I would like to know is, let's say I play my goofy little poker game, and I hit the cash out button. Is the moment I hit that cash out button the taxable event, or are my daily earnings to get up to that 2,000 each taxable event?
Well, if the coin is only usable in the game, then the way the laws are reading today, because you have these kids that play games and they get, in-game rewards that can only be used in the game, that's not income. But
so you can swap ICE to USDC or anything else.
Well, that's where I'm getting to. So since you can take your winnings and you can cash them out, you have the choice to do it or not do it. It's going to be income. Yeah. It's going to be income as you earn it from a revenue point of view. So if you make gambling winnings today, and you kept it in the currency, in the game currency, you've got income today.
Okay.
I think one clarification there is it's currency as you claim it, not as you earn it. Going back to the 2,000 claim mark. So if you were earning your ICE, and even though you can claim it at 2,000, you say you don't want to claim it, and you just have that racking up, and now you have like 100,000 claimable ICE. You still have not done the action to claim that, and you do not have ownership over that asset until you claim it.
But you have the right to do it. So, think about that.
So
think about that.
So that's a good point. But what if you don't hit the 2,000 mark? I mean, we're still talking like a rounding error. I would just say screw it and give the IRS $12 and let them figure it out.
Right. You're talking about $12. It's immaterial.
Right.
And if I understand what you're saying is, in the game, you can't claim the proceeds until you reach that magic number of 2,000. So until that point, it's only in-game money. So if I decided, I want to gamble on this site, and I like playing around with it, it's an in-game thing until I reach that 2,000 threshold, because then at that time I have the rights, at my discretion, not the game's discretion, my discretion, to take it. So until that point you reach the 2,000, you probably don't have income being earned because you're playing at that point.
All right, that answers everything I had. I'm going to go back to listening. Thanks for your time.
Yeah.
Thank you, Zesty. I think that's a good question, and not just for Ice Poker, but I mean, we've got a lot of different play-to-earn games being developed, and I think that tokens are going to be, used in all of them. So I think that it's something that we will have to face more than just in Ice Poker as well.
I want to raise one other thing just while we're all here, because this is almost a conversation between me and Michael here. Is there any way an NFT could be inventory at this point? Let's just say you're an artist, and this is for discussion almost, but I'm creating stuff, and I've got like 10,000 things. Is that inventory, or is that, what's going on there? If I'm creating like 1,000 jackets or puffer jackets or whatever, emotes now, I guess, is that ordinary income?
Yeah, I mean, if you were the creator of an NFT,
There's no tax right away, right?
No tax right away. So like if you were the creator of a widget, or the creator of something that's tangible, you created an asset, yes, and that would be ordinary income when you sold it. If I was a manufacturer of widgets, going back to my old economic college class days, and I had those widgets, it's not income to me until I sell the widget.
Right.
And that income would be ordinary income in the
Right.
normal course of business. It's not a capital asset to me.
So it's not a
something
capital.
I
So
created.
theoretically, yeah, that's why I
Yeah.
brought it up. Theoretically, you could have ordinary income on an NFT, you could have capital gain on an NFT, and you could have a collectible rate on an NFT. It's insane, you know?
And you could also have a royalty stream too,
That's true. I forgot about the royalties. Yeah,
which is also treated differently for tax purposes.
Yeah.
I think something.
Configurations?
Yeah, thanks. I think something that we haven't touched on yet are the different ways that you can calculate your taxes. So predominantly LIFO and FIFO. And so, for example, if you're doing FIFO, which is first in, first out, and this would typically be in, like, from my perspective, you would calculate with FIFO if you've been a long time holder, because you don't want to pay taxes on the ETH that you bought at $10 or the mana that you bought at cents. So if you're a wearable creator, you're going to have to pay the 150 mana. I think maybe they converted it to USD, but for the sake, I'll say mana. And you could either have a gain or a loss on the mana, but then you also have an expense to create the wearables. And if you've been holding mana for a very long time and you paid those fees when mana was $5 and you were doing FIFO, first in, first out, then you would have to pay cap gains tax on that mana increase. But if you're doing LIFO, last in, first out, you can buy mana spot price right there and avoid the cap gains taxes. Is that a correct understanding?
Yeah, I mean the way people when they sell their digital asset, their cryptocurrency, the way you're doing it, whether it be first in, first out, last in, first out, or something else, is fine. It's always something to look at as far as what does get you the best tax advantage. The thing to be aware of, though, is that once you make an election to be treated a certain way, you can't be willy-nilly and change it next year. So if you choose LIFO, you're stuck with LIFO in perpetuity on those transactions. If you choose something. Another thing to be aware of, too, that the people can do is, it's a little harder sometimes, but the law allows something called specific identification.
Yep.
And what that means is, which it's done a lot of times in the traditional investment space, where I purchased my IBM shares and I purchased it in 4 different lots throughout time. I can specifically identify one of those lots that I'm selling. And there's a process to do that. You have to notify the investment advisor in writing and different things like that. What's harder in the digital asset space is that a lot of it's anonymous. So who do you notify if you're going to be doing specific identification, where I'm going to say, I'm going to sell the Bitcoin that I purchased on January 3rd, specifically is what I'm selling. I'm suggesting to clients, if they're going to do that they memorialize it, write a memo, share it with their accounting person, share it with their attorney if they have one. This way it's been memorialized with somebody other than just yourself saying it, that you did it. It's going to be it could be a valuable thing for people that have large portfolios of digital assets with multiple lots, multiple buy-ins. Specifically when you have a case like right now where I get those Coinbase notices every day. Ethereum's up 5%, and then 2 minutes later, it's down 7%. So, it's been pretty volatile recently, and having that ability to specifically pick a lot of purchase can be valuable from this point of view.
Thank you. I've got a question from the Twitch stream, and the person who asked that I ask it just verbatim. So it says, can Metaverse Land be completely written off? Let's say it's used as a 3D website for hosting your business site. Can you guys give any advice on that?
Well, you're purchasing an intangible asset, And you have to, in order to take a tax deduction for an intangible asset, you have to have some form of life to associate with it. And just like with traditional land, I buy a plot of land, the land is always going to be there. It's not a depreciable asset. So I would think if you purchased land in any digital environment, that you're not going to be able to write that land off, that original purchase price. You may be able to write off your construction over time because you built the platform, you built a building, a digital building. That may be available to be depreciated over time because you're constantly changing and evolving it. But as far as the physical, I bought a piece of land, you own that address in perpetuity. It's not going to go away.
I totally agree. Even the construction on it, I is just attached to it. But you have a point because you could modify that. But until you do, it's there as well.
So are gas fees taxable as well?
I mean, gas fees are part of the basis of what you're buying, correct?
Rip.
Yeah, and the gas fee is a cost of the transaction. So just like if you were to sell a piece of real estate, traditional real estate, there are fees you pay. So you sell your piece of, Park Avenue apartment for $1 million, you don't get $1 million. There are fees and costs involved. Gas is a fee or cost, to make it simple. So you're going to pay tax on the net proceeds, not on the gross proceeds.
So it will count
at increase the cost either way.
It will increase your cost. So in other words, if you sold your digital asset for $1,000, that was the price, and you ended up putting $950 into your fiat account, and because it was a $50 gas fee, to make an extreme example, that $50 is a tax deduction to you. It's not going to be income again.
I believe there is one caveat to that, though, and it's when you're not dealing with asset purchases or sales. It's when you're using bridges. I believe the gas fees are classified differently because there's no purchase or sale, so you can't bake it into a cost.
Right.
That makes sense.
Matthew, you've got your hand up? Oh, sorry. Go ahead, before Matthew.
I was just going to clarify. So the gas fee will be part of the original transaction as one, and it won't be like a separate transaction, because I do understand whenever you buy an NFT, like it asks you to pay for the gas fee individually, I would say. Would it be individually?
It's part of the cost. It's part of the cost. But what Ian just said, if there's no asset associated with something, it's just an expense. If you're making a bid or something, you didn't get the bid and there's a fee, I mean, that's just a deduction. Assuming you can account for it, you can track it.
I see. Okay, that cleared up a lot of things for me. Matthew, the floor is yours.
Appreciate it, y'all. One quick question would be, a lot of hacks happen in this space. So what if I have a wallet that just gets hacked and all my NFTs or crypto leave? What do I do? Am I responsible for those from a tax perspective, et cetera? Or if I lose it in a boating accident.
Correct, Michael?
Yeah, that would be a for tax purposes. If someone stole your assets, that would be a casualty loss potentially. And depending upon what the assets were, the tax treatment, varies throughout time on that. Right under the current tax law, most casualty losses in the personal setting are not allowed for tax purposes. That was part of the tax law changes a couple of years ago. But from a business point of view, if it's a business asset, that would be allowable if your assets were stolen. But there has been situations over the years where looking back at, say, Bernie Madoff, if people who remember that, those were considered casualty losses because he stole people's money, but the tax law was given a tweak to allow those people some preferential tax treatment for those losses, but that doesn't always happen.
And I suppose if I lose my ledger in a boating accident, I still have to pay all those taxes.
Well, if you lose lose your keys, lose your assets somehow, depending upon the circumstances, would determine what kind of a loss there may be. If I took my car keys and threw them off the bridge and lost the car keys, can never get back into the car again, that is a form of a casualty loss, but is it tax deductible? Probably not.
Yeah.
Appreciate
And
it.
you did mention that you had to exhaust every method of trying to get it back, correct?
That's mostly, again, in most cases, in order to say that I have a loss, you've got to exhaust the possibilities of getting it back. So if someone stole my car, as an example, I went to the police department, I made the report, I told my insurance company, I've exhausted what I can do physically as a person, because more than likely that car is on a boat going to some third world country, never to be seen again, in many cases. So you've exhausted what you can do at that point. But I dropped my ring. I lost my keys to my my digital asset wallet. You've got to really, really search for that to the best you can. And if you really lost it, you can't get it back, then you may have a taxable loss. Yes.
Well, if somebody owes you money, you can't just take a loss unless you've sued them, or really try to collect it. It's just the concept that Michael's talking about, exhausting all your, you have to just try.
So in the topic of exhausting all the methods, like let's say with crypto, since we don't really have any like crypto blockchain police here, would we have to report it to our local authorities?
Obviously, a lot of the rug pulls they do get press. People know what happens. So I don't think that would be an issue if there was something like that, because it would be out there. The community would have knowledge of it.
But a hack, definitely.
But a hack, a hack, you'd have to report it probably to your police and say my computer was hacked. It is they may break your chops and not want to take the report, but you should report it to say, hey, there was this digital crime that happened to me. Some police organizations do have a digital crime division, and you do want to report that. Again, it's more about documentation of, from a tax point of view, the more documentation you have, the better you are. So if you filed that police report and the police could do nothing, you can't be expected to do more than the police in that regard. But you did do the right thing. You did file it. And again, obviously filing a police report, you're signing it under penalties of perjury. So, you've got a big risk if you're lying. You can go to jail for that. So, most people who file police reports usually are telling the truth. So if you did that to support your position that someone hacked you, you should be able to have a loss then.
Thank you very much.
It would seem like somebody could also exploit that if they did want to hide. I mean, I'm just thinking situations that have happened where large amounts of land, were lost because of a hack. And I don't have a question around it, but it seems like a way of avoiding taxes as well. I'm not sure if you guys have run across that at all.
Oh boy, you have a larcenous bent to you, huh?
Just a quick note on getting the cops involved. If anybody wants to read into it, Seth Green, when he got his Bored Ape stolen, he actually ended up getting the FBI involved in part of that. So it's just that's something that people have actually done.
Yeah, I think you could probably manipulate the system, but it's like Michael said before. You are committing a crime.
And again, for someone to say that someone stole my land in Decentraland and take that position, you took a loss, but then you still have it. I mean, it's not like it won't be known. I mean, things on the blockchain, it's public. That's one thing that people forget. Even though it's all numbers and codes and stuff like that, it is all public information. And the IRS, and other organizations know that, and they're all getting up to speed and how to trace through it. So to say you lost something, but then just really hit it, it's you're playing Russian roulette at that point, I think.
Yeah.
Thank you. I would like to invite Unicorn up to the speaker panel. Thank you so much for coming up. I see your hand has been up for a while.
Hey, what's going on, GM, everybody?
Good
Good
morning.
morning.
Thank you. I had something to add to the stolen NFT conversation that was just happening. So I'm a developer and an artist. I've got a website. We help out basically other NFT projects, and we had a situation like this actually. Like the ICC, I believe it's the ICC, just determined that the developers will have the rights to the metadata, and everyone was kind of upset about that. But on my side of things, we had somebody steal from a project, and what we did as the developers, because we still had access to the metadata, we went in there and changed their images, changed all the metadata, retrieved the NFTs, and were able to just generate new ones and give them back to them. So there are of tracking that down, but it's just a matter of how well the team works with their developers. Because if they're like a half-assed group of developers, they won't be able to recover anything. They won't be able to, so that's kind of like I'm just saying there's different ways of tracking all this stuff down. There are people that out here that that are knowledgeable about this.
You definitely brought up an excellent point, and now that you had mentioned this, now I'm going to start like deeply looking into the development of any project that I buy into, because I mean that is very important. That's like, you can almost call it utility.
Yeah, absolutely. I mean, I honestly wouldn't buy into any project unless they had developers in their team, because an outsourced development team, I mean, that could go any which direction, I'm not trying to shill my project or nothing like that, but I'm just saying it's having developers on hand and being able to solve your problems in an instant is a lot better utility than whatever's out there. I just think that's the best way to go, is just to invest in development teams.
Thank you.
And that's a good point too. And it's also, something people should also be aware of too, is especially, this is not a tax or accounting thing, but when you're purchasing an NFT, you want to make sure what the smart contract that goes with it says. Do you have rights past your purchasing of it? I mean, I've heard some stories about people purchasing NFTs and then they want to sell it and they can't, because the contract gives all the money to the guy who sold to them. So you want to be smart too in investigating what you're purchasing when you do it, because you could be buying a bag of nothingness at times, depending upon what the agreement says that you're getting involved with.
That's correct. I mean, we see that all the time. A lot of these contracts that we run across are just missing data, or they won't have, it's like the hidden text, That's why I feel like as NFTs and crypto becomes more mainstream, we're gonna run into a lot more of these problems, because right now only 1% of the world, or I don't know how many percent, can even access crypto and has the ability to, like, it took me as a developer, it took me like 2 days to get into crypto and everything, so it's really sketchy moving forward.
Blockchain was supposed to make everything easier for accounting and just everything. And honestly, it's so much more complicated.
It really is. Everyone is obsessed with the idea of decentralization, but with decentralization comes all kinds of problems, like it doesn't have the mainstream support, so like it becomes independent. So I guess it's trouble for now, but it'll take time for like the real teams to emerge, for people to find on them, I guess.
I agree.
Zesty, I see your hand is up.
Yeah, so this is for Unicorn. So with that project you were talking about, did they essentially take the contract and fork it to point at new NFTs, or did they have a backdoor in the contract?
I'm sorry, say again?
So with that project you were talking about, did they essentially change the contract, and did they essentially start a new project with all the same NFTs and airdrop it, or did they have door in the contract?
So basically, we went in and changed the metadata to say scammer on his wallet. So we basically just left the metadata because the image was changed, and then they just airdropped them new ones because our program so basically we manually input the traits and it'll auto generates, but you can use the tool as a generative tool. You can choose the traits, you can choose a specific one. So it was really easy from our end.
Yeah, you were talking about that, and that sounded an awful lot like the project basically had a backdoor for the developers, which, yeah, that's nice, but that also has opens up its own can of worms.
Well, it's not a backdoor because the ICC gives the rights to developers for this reason. Because imagine if developers never had any of this power and all their work is just being sent out and being judged on the people scamming other people. You know, so if we didn't have access to any of that, all these people will just be screwed. You know, and my company is incorporated, so we're not hiding. We're not, you know, we're real people. You know, it's.
Thank you, everyone. This has been an amazing conversation. We have been going for about an hour and a half. I would like to remind everyone to like and retweet the room, and also invite anyone in the crowd that may have any questions, any text questions for our friends here. Oh, and on a good note, I think my AC is fixed.
Well, I like to I thank everybody for letting me speak here. I actually have to run to another meeting. I got to sign off, but you know, I think you guys got Jerry's email address. If you have questions, feel free to reach out to Jerry, or you know, and we can, you know, if we can't answer the question, we'll get you direction or help you through it. That's one of the things Jerry and I have been doing a lot of recently, is, you know, a lot of helping people get through some of their issues, you know, as a little bit of a give back to the community. I think that's an important thing that we try to do.
And you know, to that note, we can come on here maybe with an attorney at some point too, that might be able to answer some of these other questions. You know, some of those LLC type questions, some of the DAO type things, and dig a little deeper. So, you know, we'd be happy to do that as well.
Can I ask one question before you go? If some of us were interested in having someone do our taxes, is that a service that we could come to you, to Prager Mattis, and they would actually do our taxes, or is that are you guys like bigger than the individual person?
No, of course.
Yeah, we work with a lot of people in a lot of different areas. So, you know, it's if an individual comes to us looking for assistance and guidance with their personal tax matters, a lot of people I work with today, October 15th is a big deadline, and you know, there's a lot of people within my team that are busily, you know, finalizing those things for individuals. So yes, we do get involved with people on their personal tax aspects, business tax aspects, the whole gamut area.
Yeah, so it's a big yes, of course.
Okay, thank you. And you guys have land here in Decentraland, and so I'd encourage anyone to come and take a look at your build.
Yeah, we're gonna open. You know, we're gonna have an opening, I guess, mid-October. We keep on pushing it off, but we're gonna do it, and we're here to stay, you know, and we're gonna try to be part of, part of the community, and learn as we go and teach, you know, and that's it. We're here, we're not going anywhere. That's for sure. So it's all good. We met a lot of really nice people too, So.
Well, thank you. I, for one, appreciate the information that you gave. It's going to help me make more informed decisions in the future, and I think that probably echoes for everybody in the crowd.
And please, anybody that has any kind of a crazy question, just email it to me, and I'll get to. I have time. There's not that many people on this call, so I assume I'm not going to get like 55 emails, but I'll answer emails.
I don't know. You might. There's a little panic in the crowd, but hopefully you won't get that anymore.
It's fine. I gave you the wrong email address anyway, so it's okay.
Perfect.
All right, so then I'm gonna go, and Michael's go. I think Michael left. I'm not sure.
No, I'm here. I'm gonna leave in a second.
Okay, so we can go.
Perhaps. Let's see. We did have one final person request to come up to speak. Do you have a quick question before DeFi guy before Jerry and Michael head out?
No, guys, I'm okay. Thank you.
Okay.
Sounds good. Well, thank you so much for being here. This has been very, very insightful. A lot of us has learned a lot today, and I would definitely be open to having you back with an attorney to continue digging deeper into these topics.
Fantastic, and I really want to thank Michael for getting on. He's really, I know stuff. He knows a little more. There's no doubt about it. So it was very helpful. He just got back from a vacation, and thanks, Michael. Okay.
No problem, Jerry.
All right. So excellent.
Thank you so much for being here with us.
All right.
Thanks for having us. Bye-bye.
Have a great day, everybody.
Have a great day. Thank you.
Bye.
Wow, that was an amazing conversation, I have to say. So with that done, we can continue on to any topics that any community members may want to talk about this week. DeFi guy, did you raise your hand briefly?
Yeah, thank you, Sufo. Yeah, I have question. I'm doing something with my brother, and we are creating some buildings for some communities, and I see, for example, and I represent GM parachain on Polkadot. We actually try to have integrate Decentraland to Polkadot, but I would like to know if the community on Decentraland, they have a roadmap to not only be on Polygon or on Ethereum, but add on other networks, or there's no reason for that. What do you guys think about that?
That's a good question. Thank you for asking it. I personally like Polkadot. I think that the people maybe that would have the answers to that, I know some of them might be in the crowd, but I personally haven't heard of any change to another network. I don't know if anybody else has. You're welcome to come up and speak on that. And so I guess not.
Yeah.
So you represent the Astar network as well?
Yeah. There was even there was a grant, a guy, his name is Butter. He's tried to create a proposal on the DAO to integrate with Polkadot, not using Astar because it's EVM. They use the same virtual machine, so it's kind of easy to do. But it's still a Polkadot community is very low yet. There's not a lot of activity, but there's a bunch of people on Astar. They love Decentraland. I'm on them, I always on Decentraland with my brother creating 3D buildings, all that. but it would be nice to integrate with Polkadot. You know what I mean?
Yeah, I personally would like that. Those parachain auctions. Peanut Butter, welcome. Can you give us any insight on this?
Hey, how's it going? Yeah, I know that there are plans to incorporate more blockchains in the future. I'm not really too sure to what extent that will go. I'm not sure if like wearables or anything like that will be on other chains, but as far as just being able to like display NFTs in Decentraland, for an example, should be a lot easier to use NFTs from other chains because as far as I know right now, even like Polygon NFTs have problems sometimes like representing in Decentraland. So definitely like more use case like that I would see being the first steps to that adoption.
Oh yeah, I think for example, my brother, we are actually studying more about the SDK, and like you mentioned, is that if we are gonna be like this multi-chain economy, you know, and Decentraland right now, if you compare with others, Decentraland is far ahead of in terms of that. We have like web-based, it's kind of easy to jump in. But if for example you have this huge communities on Solana or even and it's growing in Polkadot, and if Decentraland is like the hub of all this Web3 metaverse, because the other ones they are not like that. You see on Cyber, Sandbox, they are very niche and it's not open. You know what I mean? So I think if Decentraland goes all in this multi-chain idea, in terms of technology and how they already build their community, they are far ahead, man.
Absolutely. I'm not a dev, so I can't really speak too much onto the development side of those things that much. But I do know that you know, on the higher level of things, that's definitely a goal for sure.
What was the question?
Oh, the multi-chain type of roadmap. If Polygon, if Decentraland has this multi-chain roadmap, or they're gonna just stay on Polygon and Ethereum.
I have not heard much about that actually. I've been kind of staying away from Decentraland because I've had a bad. I've just I don't know. I bought a bunch of you know, mana, and I haven't really done anything with it. I should actually explore it a little bit more actually.
Yes, you should come and join us. We're I'd like to think that we're a pretty cool group to hang out with.
That's why I'm hanging out.
Awesome, that's the first step.
So with that being said, Unicorn, can I invite you to Wag Me Wednesday tonight? Have you ever been on Decentraland before?
No, I actually did. I signed on like one time, but I have a kid, so my time on there was like 5 minutes, and just pretty much I haven't explored anything really.
Well, I mean, if you have a little extra time tonight, at 9 p.m. Eastern, I could I just followed you, so I could send you a link to the dollhouse, and you know, just click on link, you'll jump in, sign into your MetaMask, and you'll be ready to party.
Oh yeah, cool. I'll stop by.
Somebody set this man up a DCL daycare.
Yes, I mean, we have some spare land. Maybe could do that.
Yep, I can send some wearables. If you DM me your ETH address, I'll get you I'll make sure that you go to the party in style.
You make sure I look cool in there. I'm in. Man, that's like a whole new game for me. Decentraland. I don't even know what I'm stepping into.
Oh yeah, we'll get you some glowy wings. You know, you gotta have some like wings and stuff like that. So we'll get you hooked up. Don't worry about it.
Oh, awesome. That's great.
And CK, I see you've got your hand up.
Yes, I just wanted to kind of change topics a little bit if everybody's comfortable with that. Otherwise, tell me to shut up and I can wait.
How's everyone feeling about a topic change? I think we're good. The floor is yours, Bubbles.
I mean, it's definitely Decentraland related, so it's not like it's super off topic. But basically, today I was in the DCL DAO Discord, just kind of rummaging around as I do, and I happened to see the Comedy Matrix people, which, you know, I know just saying that out loud will probably make some people feel a type of way, but they were basically putting out a call for people to share their pictures and videos so that they could make a backdrop at the IRL event that their grant was for. And then after a little bit of communication, it seems like maybe they want to do something where they actually have people in world streaming that they can stream that into the green room with all the comics. I think they said there's something like, oh gosh, how many comics? It was quite a bit of comics. Let me see if I can find the message. I can't find it that quickly, but anyways, so they're gonna stream this stream back into the area where the comics are and then out where the fans are. So if anybody, in particular, they want to do it because the event is in Vegas, they would like it to sort of connect. So if anybody is an ice streamer, a DG streamer, or goes to the casinos, no matter where it is, if it's DG or Holy Ones or any of the other locations, and would like to be a part of this, definitely go in the DCL DAO Discord, find the Comedy Matrix proposal. It's called Decentral Comedy Promo at Skankfest Vegas, and definitely offer up your streaming services. They're looking to basically like show more of what the world is in actual movements and not just you know, some static, you know, imagery and things like that. They're also going to set up a computer for people to interact with so they can see the world. And then they kind of asked me this interesting question about if anybody can take a photograph of a real person and then turn that into maybe like a head wearable or something like that. They're trying to see if maybe they can do that for some of these comics. So regardless of how you feel about the proposal, it's an opportunity for people to be showcased and highlighted. So hit me up if you would like any more details or a link to that channel in the DCL DAO Discord, because I think it would just be a really cool opportunity for people to be shown in a different experience.
Thank you for bringing that up. That's such a cool concept that they're working on.
Yeah,
Makes me really
definitely.
happy.
Yeah, it kind of evolved a little bit. I'm not taking any credit for it by any means, but I know that like I was asking them some questions, kind of prodding them a little bit and being like, why don't you show in world instead of just photos? You know, like make it really immersive. People will probably be more inclined to jump into the world after the fact if they've experienced it. And so it definitely evolved from there. So it's cool that they're wanting to highlight more people and also connect it to the event and have that really like IRL and world crossover. So definitely hit me up or go in that channel and hit them up directly. I'm not like affiliated with their grant. I just happen to be speaking in the channel, so I can help facilitate a conversation if that helps. But otherwise, definitely go jump in and add what you can.
For the head recreations, I would say Dapcraft would be a great group for them to hit up, because I know they've released 4 of the Sonias, I believe, and they currently have their Naomi proposal up for that LinkedIn wearable set. So they have created, you know, semi-realistic recreations of humans before in Decentraland.
That's awesome. I'll definitely share their name to that channel. Thank you.
DeFi, I see your hand is up.
So, Sinful guys here, in your opinion, for example, I see the competition of kind of other metaverse digital lands. They're trying to focus in idea of community building, you know, like voxel style. You go, you enter a server, and you start to create like kind of Minecraft. And the other trend is there to say, look, you have a GTA and other type of metaverse digital, so we're gonna just integrate in and create like a token economy, because they're gonna leverage their community, which is already built, kind of big. So that's the trend I see right now on metaverse Web3 type of things, leveraging existing communities and trying to be voxel style, so you can be like Roblox and Minecraft. You think like Decentraland, what we're doing is that we're focused on events, like music festival, all that. Do you think we need to go further and focus more on gaming and community building more than, events or music festival? What do you guys think?
I do have a lot to say about the gaming aspect and whatnot. One, I will say, shameless plug, Sandstorm. Sandstorm is originally a sandbox company, which is the voxel based metaverse comparable to Roblox and Minecraft. And currently we're kind of trying to work together with that other metaverse, just to cross-pollinate creators and individuals. And right now we've been onboarding builders from that metaverse to Decentraland with bi-weekly DCL builder competitions. So if anybody wants to enter, the next one ends this Friday, and there's $5,000 cash prizes every other week. But then just to talk about the gaming aspect, I mean, I would definitely say that the way Decentraland has been developed as a whole, it's more of a social metaverse versus a gaming metaverse. However, there are several games that have been created and have been doing very well. You've got DG, or Decentral Games Ice Poker, which is the most prominent one right now. At one point this year, it was responsible for driving around 60% of all Decentraland traffic, which is nuts. But we've seen other entrants recently, including Golfcraft, Meta 8 Balls, Dice Masters, Vroomway, Exodus, and Butterfly Spawn Game, and more. One of the proposals that is currently out, a grant proposal, is from Ethermon. And Ethermon has over 600 parcels, and they have been developing probably one of the more complex MMORPG style games in Decentraland. But the way Decentraland works on, I guess, the back end, they've had to do, like, they've faced many delays and have had to implement like their own WebSocket servers and find a lot of roundabout ways to make this happen. And they've been developing it for around 1 to 2 years now, and it's still not entirely there. But I think companies like that and some of the other gaming groups in Decentraland, every day or week, they do come up with some new solution to do something that hasn't been possible. So I think that over time, it will be kind of an exponential growth curve of gaming opportunities available in Decentraland. But at the same time, we are one metaverse of many. And I think, interoperability will help people, jump between worlds for the different games and experiences that they want to participate in.
Thank you, DCL. And I mean, to the point of how other metaverses are kind of focusing on community building and trying to get onto their metaverse, it's a very smart idea, because here in the metaverse, I always say that people are the commodity. So kudos to them. And to tell you the truth, in all honesty, I kind of don't see any competition from other metaverses due to the fact that we're all in Web3, trying to push Web3.
Yeah, that's a great point to make. I mean, when you look at the current user base of Web 3.0, and then you look at the current user base, or I guess just the current number of gamers worldwide, there's over 1 billion plus gamers worldwide, active gamers, and the Web 3 space has a couple million people, right? So it's like, we're not really trying to fight over a slice of the pie right now. We're all trying to grow the pie right now, and we can fight later on, like 10 years from now.
Yeah, and it's been interesting to see how collaboration can work with the different metaverses. I know there's a couple people like on Parcel right now and in this room that we have, you know, our content in Decentraland, but then they also have like a room in Spatial. And it's been interesting to see that cross collaboration. We had a party where we were broadcasting the people partying in Spatial on the scene at the Dollhouse here in Decentraland. And then they were broadcasting the video of us dancing in Decentraland on their screen in Spatial. So, I mean, I'm coming from the background of like DCL or die. Because I own land here, and like I'm going down to this ship. And I think I've really changed my perspective that it doesn't have to be like we can all be winners, and our dreams don't have to look the same. And so, yeah, still have to go to Spatial. Haven't gone there yet, but I think there's a lot to it. And Brandon, you're up here as a speaker. You want to speak on that? Can I put you on the spot?
Blessed be the fruit friends. Hi. Yeah, the whole Spatial thing has been really fucking fun and dope. And I'm gonna let you guys know right now, what I do with my Spatial is I have my little like room that has all like my NFTs and all my videos and stuff. It's like my little show off room. But while I'm at work, I just stream movies into my Spatial place, so that way when I'm at work I can just go on my phone and watch movies in my Spatial thing while I'm, you know, it's perfect. But yeah, that, and I just also want to come up and talk about content. Obviously, you know, every week, if you make content, if you do anything and put it out there, keep doing it. Go and get, like someone said earlier, pie. We're not going for this. We just want a big pie, and we want our pie to be dope. Okay, so keep pushing at that. And then also, if you have communities, if you have anything, deadass, you are the reason that this is all working. Anyways, you know, you're the reason. Damn, outside loud as hell. I was also gonna say, like, the people that have been like just doing anything as far as coming every day or just showing up or running events or doing builds, I just want you to realize how important each and every single one of you are, because you have, like, my nerdy ass, I just come home and sit at my computer because my friends are on my computer. You guys are the reason that I have something to fucking do all day. So besides all the bullshit that we go through in Decentraland and all the dope shit that we go through in Decentraland, I just want to make sure that y'all know I love y'all motherfuckers. And also, wish your vodka Brandon 10 code 10% off. Love you.
What?
That's the best, Brandon. I love it.
Thank you, Brandon. And this is I'm gonna recite a quote from one of my favorite people on Decentraland, Artryu. I miss you, man. Hope you hear this. Your network is your net worth in this space. So keep that in mind. We are bigger than we think. Or let's see. Are there any more topics that anyone would like to cover today? Or can we just admire Brandon?
Hey.
Well, I guess it looks like, Kanessa, do you have any topics at all? Or maybe we could start to wind down here a little bit.
I wonder if everybody's just kind of taking in today's content and letting it like process into the deeper parts of our brain, because yeah, I don't know about you guys, but the whole crypto tax scene, you know, I think it is something that we are the pioneers, and so we're figuring it out kind of before, you know, crypto is mainstream and accepted widely. I feel like if we walked into a H&R Block, most of them probably would not know how to handle us and our metaverse dealings. And so yeah, hopefully today that was really good for everybody, and at least now we can kind of come back and listen to this and at least have a little bit more understanding. And yeah, I don't know. Hopefully it's been helpful. It has been for me.
Curations. Yeah, the floor is yours.
Yeah, kind of on the tax note, I just got a grant approved yesterday. So that's one of the reasons I'm very interested in the taxes for the grant. But I just wanted to say, you know, for anybody on the call that supported the grant, really appreciate it. We've got an awesome team that has been built over the last couple of months. And, you know, of all groups, we have Dapcraft doing the back-end architecture and leading the SDK work, and so I'm very, very excited. We've already kicked off this project, and over the next 4 months, you know, very excited to have the opportunity to really try to deliver something special. And I know there are a couple of other groups that are, you know, involved with or working with some educational experiences. I've already been in touch with the Decentraland University, and they want to work together in some way, but I know there's several other groups out there, and we are planning on kind of trying to make it more scalable in a couple of months by releasing a course submission process. And just in general, if anybody is interested in the education space or is currently doing something with education in Decentraland, would love to talk to you, show you the plans that we have and what we're working on, and maybe you know, collaborate together in some way. But thanks again for everybody's support.
And I would like to thank you for coming up here and contributing to the conversation. Like, you did bring up a lot of insightful things whenever we had Prager here. I'm just blown away by today's conversation. I think I'm gonna be like re-listening to this one like multiple times. And to Brandon's point about creating content, I would like to report, Brandon, I have taken a minor step forward. I am now publishing all my content, or like the show streams and whatever, to YouTube. So now
Let's go.
now we can start getting some you know, exposure there. So I guess we could start winding down. DeFi, any final words before we start to close down?
No, the final words is like Decentraland is ahead of a lot of communities on Metaverse. Obviously, in Web3, everybody's kind of together, but we have a very nice community. Now I see all the time on Twitch. I try to talk with everybody on Twitch that's creating DCL content on YouTube. You know, because like you mentioned, the most important thing that we have is the network effect and how to create genuine like community on this DCL, you know. And even though right now there's not a lot of active monthly users, but the people that are there actually like the project and wants to build together, you know. So we need to maintain this very strong community to. And you guys are doing a very good work on that.
Well, thank you so much for the kind words, and you know, we're trying. We're stronger together than you know, individually. Unicorn, any final words for you?
I do got some final words. Love yourself, love others, brush your teeth, change your socks, and get some sleep.
Yes, very important. And you know, to the party I invited you earlier, I did pin a tweet at the top. It's tonight is going to be a Wag Me Wednesday Libra party for all our Libra community members. We'll be celebrating them tonight. And, you know, I'll send you a link once the time gets closer. Thank you for being here. Brandon, final words?
Blessed be the fruit, friends. Well, I mean, I fucking love all of you, for one. Two, if you could sub to my YouTube, that would mean a lot to me. That's it. And also, what's your vodka, Brandon 10? Actually, the vodka's very good. Like, it's really good. Trust me. Like that. Ooh. But yeah, thank you guys for having this every week. Obviously, love you guys. I mean, yeah, you guys are my heroes. Love you.
You're my hero, Brandon.
Thank you, Brandon.
CK? Might be away from Mike. Let's see. Kanessa, any final words?
I think just try to have a great week, everyone, and yeah, see what we can build in the bear market. Love you all.
Thank you. So yeah, on some final notes, I really appreciate every single one of you that showed up today. The space is recorded, so if any of you were kind of late to listen to our to Prager, you will be able to listen to it after we close the space. Love you all, and let's keep building, everyone. Thank you. Goodbye.
Love you. Bye.